If you didn't know, it is National Savings Month, and last year the National Treasury came up with a way to encourage investment within households. Most South Africans don't have savings pools to tap into when times get hard, and they usually cash in their retirement savings. Well, Treasury has, as a result, introduced a tax-free savings account. This morning we discussed the benefits of tax-free savings. We're joined now by Investment Solutions Chief Economist Lesiba Mothata. Lesiba, good morning. Thanks for your time. Asking people to save, like we say, at a time like this is a bit of a stretch, but it can be done.
Indeed, and I think it ought to be done at all times. It's not good to always overextend yourself in terms of debt to a point where on a monthly basis a huge portion of it is going on interest payments and you don't have the ability to save. I think we need to introduce the culture of saving, even if it's as little as 500 to 1,000 rand a month. It goes a long way later in just creating a way of thinking in one's response to money. I think one needs to have a culture of saving.
Let's talk specifically about tax-free savings. How do they work?
So there's a minimum of 30,000 rand that you need to put down. You can go to any bank and you open this tax-free account, and each year you can put 30,000. The maximum in a year is about 30. And you don't get to pay any taxes, whether they're dividends, whether they're interests. On those type of returns, you don't get to pay tax, which I think is a wonderful thing that the National Treasury has put together. Although the amount is a bit little. Yeah. We should have been able to do like 150,000 rand, for example. I
mean, do you think that the ordinary household, what is the average, do you think an ordinary household would be able to put away in a tax-free savings account, it's realistically?
It's problematic in SA because we've developed a culture where a huge amount of big-ticket items, like a car, has taken a huge chunk of a monthly expenditure. If you were to rationalize that, make sure that it makes sense and the amounts are better, there's scope for households to begin saving, but it will require some decisions to make sure that you scale down on your expenditure.
So there's no catch to a tax-free savings account?
No, it's a wonderful investment. 30,000 rands, as a maximum, and you could do that every single year. But there are other types of savings you can also think about. Like the National Treasury has this retail savings bonds. Instead of having open an account with costs, I mean, there's always costs that are involved when you save, but with this type of investment with the National Treasury, it's a bond investment. We will have to explain what that is, which is not like a household or mortgage bond, but it's an investment bond which is issued by the National Treasury. That also is an interesting, it has an attractive interest. In fact, at the moment, 8.25%, which is much higher than what you get if you had put money at the bank.
All right, well, those types of savings where your bank will sort of choose out of the top countries or the top companies, I beg your pardon, and invest for you. Is it a good time for us to be doing that now, given our economic climate, given that, we're trying to get investment, just the whole issue with South Africa and our economy? Should we be looking at something like that?
Most definitely. In fact, the whole savings culture is such that when you're in dire economic needs like we do have a situation now, is the time that you begin to tapping in fact, even increasing the amount that one saves. South Africa is in the need of that. We have a current account deficit at 5% of GDP, and our investments ambition in terms of investing in the economy are much higher. But we don't have a pool of savings to tap into. And this actually can help if we create a culture of savings.
Lesiba, how would any individual know which type of savings is correct for them? What are the things they need to be sitting down, going to their bank? What are the things they need? What are the questions they need to ask as to figure out what is the right type of savings account or plan I should have for myself?
I think that one needs to invest with what is understandable. If you don't understand the investment, don't get involved, because I have seen I've heard a lot of investors that go into promises. I mean, there are companies that go out and promises 100% return, etc. You be cautious. First of all, go to a bank or whatever financial institution there is. There ought to be someone who's authorized to give financial advice, right? They have to actually be registered with the FSB in order to offer financial advice. Once you do that, they can break it down in layman's term, which is appropriate for you, given your asset and liability structure, because not all of us are the same. So there's no one product that fits all.
Okay, so make sure you understand how your money is going to work for you. And
that's critical.
All right.
Because there are lots of crooks out there who are trying to make quick buck out of
you.
vulnerable savers.
All right. If it sounds too good to be true, it probably is. Thanks very much. Investment Solutions Chief Economist Lesiba Mothata with some tips for us there.